Hey everyone, this is Rudy from Investor, or as some people are starting to call me now, Mr. Oxy. What I thought I would do is, in this presentation, just put together some of the second quarter results in graphic form and an easy to view presentation that you can follow along. If you're invested in Oxy, or if you're invested in Oxy, you may as well take a ride with me here and see what's going on in Occidental Petroleum under the covers. First thing we do is we just take a look at the numbers. And what I'm looking for here are significant changes from previous quarters. So right now, the latest quarter that was reported was the second quarter of 2020. Huge drop in revenue. You can see sort of the revenue changes over the last couple of quarters, right down to about $3 billion in revenue for the last quarter reported. Net income, actually not too bad, in fact almost a slight improvement. And then we look at the operating cash flow. That's looking a little bit empty there. The cupboard is bare. But then on the other hand, you look at the capital expenditure and you go like, oh well, that's some improvement. Management might be doing a pretty good job in some way or another. We look at cash, these numbers in billion, down to about $1.2 billion cash and cash equivalents on hand. We also know from the conference call with Vicky Holub on Tuesday morning, August the 11th, that Occidental has a overdraft facility of $5 billion available, which is currently not used. So in addition to the $1.2 billion or so cash that they have on hand, they also have access to significantly more capital or cash if they need to pay for something urgently. We look at the increase in long-term debt. Obviously, that's the acquisition of Anadarko. But then, even having said that, there's already a significant decline of almost $10 billion in long-term debt. And then the shares outstanding, fully diluted, have increased quite a bit, which is the opposite to what you want to see as a shareholder. You want to see less dilution if at all possible. So that's just a quick look at the numbers, but if numbers bore you, let's look at it in picture form and maybe a little bit more entertaining. Domestic production, so oil, baby, oil. This is the Permian, and you can see the production from the Permian Basin, 465 million barrels of oil. This is obviously when you're producing approximately 1.4 million barrels per day, then the Permian in this particular example contributes a large portion of it, and so does domestic in general in terms of the overall US production. Then if we look at global as a comparison, you can actually see the total production in blue. And what's neat about this is that you see there's not really much of a significant change in terms of global production. They are producing still at a rate currently of approximately 1.4 million barrels of oil or oil equivalent per day. In this particular graph, you can compare the blue section, which is total production globally, to the green section, which is the Permian Basin. So you can kind of see how the two compares and how much of their production is done domestically in the United States. Revenue segment, well, it's oil, baby, as I just said a minute ago. So when you look at the actual revenue for Q2, which is almost $3 billion, and you look at the actual production of oil and gas specifically, the rest pretty much pales in comparison, with the exception of the chemicals division that is making a significant contribution as well. These are numbers in dollars. So 2/3 of their revenue for the quarter was generated out of oil and gas. Quarterly trends. So what we're looking at here is Occidental Petroleum's quarterly revenues over the past few quarters. A nice uptick until the bottom fell out. And that's not so much directly related to Oxy, but more related to the fact that oil was so cheap during March and April that almost any driller or any corporation involved in the oil industry pretty much saw the bottom drop out of whatever business they were doing and whatever they were into at that point in time, including Occidental. Quarterly cash flows. Well, this is an interesting graph because if we go back a few years, this is 2015, and look at the cash flows, it's sort of mostly flat. And then you have a drop off here. This is 2017 going into 2018, a nice uptick until they got to the point where they were really brave and said, we're generating a lot of money, let's just acquire Anadarko, which happened sort of around here. And then we look at where we are today in terms of the last few quarters, and you can see this is not really a good picture. Of course, if oil can maintain the current levels of $40 or above per barrel, and that's for West Texas Intermediate and Brent, then this picture could change a bit again and perhaps give us a future uptick in the near future as Oxy continues to generate a production of over 1 million barrels of oil or oil equivalents per day at a much higher commodity price. Quarterly oil and gas prices. So when we look at this as a general rule, you can see that the green in this particular instance, which is the sort of average oil price per quarter, is fairly constant over quite a few years. This dates back to Q4 of 2017. So for quite a few years, we were trading in that range of around $50, $60 or thereabout until we got to the coronavirus and the drop in demand and the crash for a whole variety of different reasons, and not just the coronavirus, but also the decreased demand, the OPEC countries having a little bit of infighting, certainly a spat between Iraq and Iran and Russia, the usual suspects. Saudis getting a little bit involved in that one as well. But the fact of the matter is, we saw the oil price just crash. And what we're looking at here is the green actually gives you the average oil price on a quarterly basis, and then the browny beigey kind of color is for natural gas and liquid gas. This is just unbelievably cheap. I mean, for gas, so over here you might be able to read, it says dollars per MCF. MCF is a million cubic feet. Gas, trading at around $1 or so is just it's crazy cheap. So if you live in a cold climate or a cold country, like Scandinavian countries or Canada, and you're paying exorbitant amounts of money to heat or cool your house, and you're running natural gas, then you got to know that the government is just gouging you on taxes rather than the price for natural gas, which is super cheap. Quarterly long-term debt versus total cash. So this is the thing that worries so many of the analysts, Oxy's high level of debt. So what's interesting here is if you look at the time period since Q3 of 2019 to where we are today, and obviously you can see there's a bit of a flatlining here at $38 billion in terms of long-term debt. Oxy has done great work in terms of firstly reducing the debt a little, restructuring some of it, raising some additional financing to settle some of that debt. Quite literally, if Oxy can just get a bump in terms of revenue, this entire picture changes very, very quickly. How quickly? So some people are saying to me in the comment section, can Oxy be trading at $50 in 3 years from now? Who knows? That would be nice, but I can certainly say that if we can maintain the oil price where it currently is and it maybe gets an uptick from there, Oxy's share price can recover pretty quickly as well. Then just to wrap it up, so we're talking about the oil and gas prices, and let's see where it is today. So a little earlier today is August the 12th, 2020. We see West Texas Intermediate at around 42.67. I think that's the price it sort of closed at today. And then you can see Brent. I mean, there's no question where this line is going. If you think you're going to be paying in the United States around $2, $2.50 for a gallon of gas over the next year or two, I'd be very, very surprised. The good news is if gas is costing you more at the gas station when you fill up your car and you own an energy stock, you probably are losing on the swings and gaining on the roundabouts, or the other way around, depending on which way you look at it. As long as we have West Texas Intermediate and Brent respectively in a range of $40 to $50, and of course, if it pops $50, this could be very lucrative for Occidental. I remain positive for the company. I remain positive for its outlook. I think the management is doing a good job. I like Vicky's attitude in terms of the market as CEO. She knows what she's doing. She's a bright CEO. She's a good leader, and I look forward to great things from Occidental. So that's sort of Occidental in pictorial form for today. Enjoy. If you're long, stay strong. If you want to pick up some bargains, maybe you consider Occidental to be at a bargain price at $15 where it's currently trading. But whatever you do, stay safe, take care, and good luck. This is Rudy for Best Investor signing off, and I'll see you next time. Bye-bye.